Hello, everybody. Joe Malone here, coming to you live on Dallas Trading Floor. Well, it's Monday, and looks like the Dow's up pretty significantly today. It's the airlines in particular have seen seen a movement. I basically went into Delta this morning, and of course on Friday was in Boeing. So it seems like the reopening trade is starting. And so let's just kind of get into the slides. Um, basically, there's an anticipation now that we are going to get a reopening. So the Nasdaq is up a goodly amount, 84. It's right at the 50-day moving average. The key level on the Nasdaq is about 13,400. And it's 13,404.40 when this was taken. The S&P is up today as well. The Dow Jones is really the standout today. It's up, and the volume is up. Now, here's the thing. It still is sort of a tale of two stock markets. The Dow stocks, the cyclicals seem to have made a move. But the other stocks, not so much. So some of the stocks that we came to kind of rely on, some of the tech stocks, they're still pulling back. So be very careful in initiating new positions, really, on some of the tech names. Just wanted to show you Delta Airlines. It's basically moving very nicely. It had a gap up today over 40. I bought it right at the buy point, which is basically about 50. So it's up nicely today, about 2.97% on the day. It still has an extremely low composite rating, but that's, I think, due to the fact that it was so beaten down over the last year or so, because of the fact that the airlines just weren't going anywhere for a while. That's going to change. There were some big orders for Boeing from some from 737 Maxes. So it looks like we're starting to see some interest there. Also, one you want to probably take a look at right now is Marriott, MAR. That seems to have moved well. It didn't gap up, but it's poised for probably a pretty good move here. Just wanted to show you the Nasdaq Composite. Of course, this is the entire Nasdaq, and it is up right to the 50-day moving average. So that's a good thing. It retook that. There was a low, back in the beginning of February, and it's pulled past the low. It's tested once, twice, and then three times here. So this is a very bullish sign. The fact that it tested and it's moved, hopefully it'll move above that 50-day line. If it does, then we're definitely in a confirmed uptrend, but that's a very, very good sign that we want to see. The Spider, which is the Diamond, which is the Dow Jones 30 ETF, it's up pretty strongly today, 0.43, just 0.113. But what's interesting about this is only 30 stocks, and it's up as well. Key level on this one's about 312, and as you can see, it's moved above that 50-day line. That 50-day line is very important. As long as you see how it started earlier, the rally in the Dow started before the Nasdaq. So very, very interesting rotation going on there. Also, we have let's move over here to the S&P 500. This is the world's largest ETF. It's called the Spider. Many people have their entire net worth in this one, and it's significant because it is also pulling up. It's at 395. The key level in this one's about 383. That's where the 50-day line is right here. That's this red line. So we made a test and we've moved higher. That's good. The only concern here is it's a little bit low volume on this, but other than that, we seem to be in an uptrend. I just wanted to show you a stock that's going to come on to the S&P 500, and it's an interesting one. A company called Generac. I don't know if you've ever heard of it, but they make generators, and generators are very big, especially when they have these power outages, which we had in February, and here in Texas, we had some serious power outages. So the Generac company has done very, very well. It's going to be added to the S&P 500. So this is definitely one to watch. You might want to put this on the watch list. It's 332.43. It's up $3.13, about almost 1%, but on heavy volume, and it also has a 99 relative strength. So is looking pretty good. This one probably, I suspect, will move higher probably in the next week or two. It's looking pretty good. Just wanted to show you the optimism. Well, we're finally turning the corner. It looks like there is much more optimism right now. We have moved we have moved up. And I think it has a lot to do with the reopening. I hope it does. That seems to be the way. So it's definitely moved up to essentially where we were prior to the election, which is good. Not quite, almost there. So that's actually a very good sign. Just wanted to show you what I currently am holding long. And of course, I have Ford Motor, Halliburton, Rent-A-Center, which seems to just keep on. It's like the Energizer Bunny, keeps on going up. Granite Construction, Simply Foods, it's up pretty good today. I have Boeing as well, and then I added Delta Airlines. Now I did drop Westlake Chemical. Westlake Chemical pulled back. It went down below my 7%, and then of course I always sell out when that happens. So that's kind of a that's kind of the way it moves there. So without further ado, let's get to some of the questions and see kind of what what's up here. What do you think about CCL, Carnival Cruise Lines? I mean, I have to admit, I have not been a Carnival Cruise Line bull for a long time. Just because I just when the pandemic is going on, I just couldn't really see necessarily how it could be, how it could work. But it seems as if it has been, with the reopening, it has it has the potential to work. So let's take a look at the chart. CCL, of course, is the symbol for Carnival, and go right to that. All right, there we go. There we go for Carnival. Yeah, we had a very nice moving up. It's up $1.11. It's still relatively weak on the relative strength line. The last actual buy point was back here, basically at the beginning of March, and that was a cup first stage, 24.38. It's pretty far extended right now, but it looks like it may move above a buy point. So let's take a look at kind of the long story here, and see see kind of where we're at in terms of that. Again, the last buy point on this, 24.38 on that. We do have, of course, decreasing sales. I'm not liking that. It did have a major turnaround here. Now the question is where to buy it. I just still think it's a little extended. But if you did want to buy this thing, you possibly could buy it above. Let me give you the number here. I'm looking at. Let's see if I can get a good idea. I believe it's buyable sort of above this, above $30. So here's what I would do if I was in this one. I'm not in this one, to be honest, but I think with this one, it's CCL is buyable above about 30. That's what I would say. Where your best bet is it's above 30. Basically, there's a short term sort of kind of a pocket pivot right there. So you want to see it move above that line. It's a little bit extended right now, off of the 10-day line. It's a little bit extended. So I wouldn't recommend it right now, but but currently. So really, basically, what it where it's extended is above that 10-day line. And so that's this little pink line here. So right now we're more than 10% away from that line. So really, it's not buyable. It's really not buyable at this level. I think you've got to wait a little bit, wait for it to pull back a little bit, and then possibly form a base, because right now I think it's a good stock, but right now I would only buy it if it moved above 30. But right now it's pretty far extended. So here's the thing with Carnival, CCL is extended, and should watch list. So that's kind of really the long and the short of it. You basically need, currently this is extended because it's from there to there, and so right now you need to watch list this. Wait for the trend to catch up. If the trend catches up, then it's possibly a buy. But right now it's not a buy. It's currently extended. So if you buy it at this level, there's a high likelihood that it'll pull back. But I appreciate that very much. That's very interesting. Let's see if we have anybody on TikTok. Here we go. We have one. Hey Jim, what do you feel about CHPT? It's the largest EV company. You know what? I like BLNK better, but let's look at CHPT. And I'm going to clear it to BLNK. This is Chargepoint. Okay, here's the chart on Chargepoint. It's essentially a downward trending chart. So right now, let's look at the weekly to see. Yeah, right now it's pulling back to the 200-day line. So here's the thing about Chargepoint. I think that you want to look at BLNK, BLNK, instead of Chargepoint. That the stock is just handling it a lot better. This there was I think you want I think instead of this one, Brendan, thanks for this. I think the one you want to be looking at right now is BLNK charging, BLNK, and not not Chargepoint. So that's kind of what I would say. I would say BLNK, BLNK over Chargepoint. So that's really, that's really what I would say. I think this is a great business. I do think that we're going to see we're going to see consolidation in this industry eventually, but right now I think the best of the breed is BLNK, not Chargepoint. Even though Chargepoint is bigger, BLNK has a better chart than Chargepoint does, especially a weekly chart. Let's look at the daily on BLNK. BLNK is still my favorite. It's still below the 50-day line, but it has moved above the 21-day line, and it has moved decisively. And I want to show you the chart that I have on it. So right now, BLNK is in an uptrend. BLNK is an uptrend, and so it is buyable at this level, actually. And it's got a 99 relative strength. So that is a very, very good thing. And as a matter of fact, I'm going to write that down. BLNK is a chart is buyable. All right, BLNK is buyable. Okay, and I've been in and out of this one since last summer, since about 10. So it's definitely showing very nice strength. I think you want this one, and it's better than Chargepoint. It's got 66 checklist, and it's got an excellent ownership. Let's look at the sector. Sector is excellent at 15. So that's the one you want, as opposed to Chargepoint. I'm not bagging on Chargepoint. I'm just saying, out of these two, I think this is a great industry to be in, but you want to be in BLNK, not in Chargepoint. All right, let's see. Thank you for that question. It's a great question. I'm going to take the next one from TikTok. Okay. All right. Okay, there we go. All right. What's your opinion about Q? Oh, it is the most undervalued stock in the market. No, hey, I'm not a value investor. Let me just put it out here. Don't buy stocks based on their quote unquote value. Value investing will lead you to ruin. I'm a momentum investor. You want to see stocks that are moving higher, and you want to get on the escalator and move up to the top. Value investing is for people that have a very long-term horizon, like Warren Buffett. He's an excellent at doing this, but his horizon is 30 years. Mine is more like 30 days. So here's the thing: QUDIN. Try to avoid it. I don't think you're going to be successful with that stock. So my opinion. My opinion. Okay, C3 AI. Let's take another question from TikTok. C3 AI. This had tremendous sponsorship from. I'm going to move into AI here. Hopefully, we'll get that to come up here in just a second. All right. So, well, did it give me AI? There we go. C3 AI. All right, let's look at the chart. The chart on this one, unfortunately, I was in this one basically, in about the 176 range. It tried to move past the buy point here, basically on this cup formation, cup with handle, but it failed, and it moved below the 50-day moving average. This is why it's so important when you're trying to buy breakouts, and I do a lot of this. When you're trying to buy breakouts, you've got to set your stop losses very tight, typically at no more than about 2 to 5%. So when it tries to break out and it fails, you're not left holding the bag. A lot of people, I think, rode this one down below 100. It's now 86.14. Right now you just can't be in it. It's just it's not the time. So really, avoid AI right now and downtrend. So that's really what you got to do. You can't, when a stock goes south on you like this, you've got to be, you've just got to avoid it. What's happened is it had a beautiful cup, and then it pulled, and then it tried to break out, but it didn't, and it fell, and it fell hard. So it looks like it's getting a little bit of support here, but I would not buy this one right now. It's just it's in a downtrend, and you don't want to buy a stock in a downtrend. There's a famous saying, try not to, don't catch a falling knife, and that's essentially where we're at. Okay, Chris. Oh, hey, thanks, Will. ARK. Now, by the way, if everyone that was on the action trade alerts, I put out a spread on ARK, and it's doing quite well. But let's look at it. Let's see if there's any buy points. Even though it's a great stock, it doesn't necessarily. We'll have to see if it's got any buy points. I'm going to show you the chart here for ARK. Basically, what's happened is, we had this inversion where we had the 21-day below, the 10-day below, the 21-day below, the 50-day. We're still above the 200-day. This is called an inversion. But the thing is, it looks as if the trend, at least in the short term, is distinctly upwards, which is good. The question is, what can we do here? Well, right now, if you're in this, I think it's a good, I basically put the spread on basically about, almost when it touched the 200-day line. I do like to buy off the 200-day line if there is a reversal. And there's definitely a reversal here. It went down, it almost touched the 200-day, and then boom, it started to move up. So it's moved past the 10, it's moved past. Here's the thing, the correct buy point probably is above this level here. This is the 50-day moving average. So here's what I would do on this one if I was going to be in. I'm already sort of in this through a spread, but 138.50 is sort of where I think you want to you want to be. So here's what I would do in order to do this. 138.50 plus 10 cents equals 38.60, and that's where you possibly could buy. You could buy this. So basically, what you need to do here, if you want to buy this, and I do think ARK is good. I really do. It's pulled back a little bit. I think you want to buy it basically right at this line, at the 50-day as it moves higher. So in order to do that, what you need to do is set a buy stop limit order for $138.50 per share plus 10 cents. So as it moves over there, then I think you can buy it, because if it moves beyond this 50-day moving average, I think it shows a lot of conviction. Now, how far are we away? Well, we're pretty far away. 128.47 is where we are right now. So we do have a ways to go, but I do like this a lot. As you can see, this blue line here, that's the relative strength line. It is moving up. So let's kind of take a look at the smell test. Now, here's the thing, because it's an ETF, this has a little bit different of a test on this than a regular stock. So 55 is actually acceptable. It actually, interestingly enough, some funds of funds actually own this. Now, this is an ETF, so it owns other things like Tesla and those kind of things, but there are other stock funds that own this as well. So they're called funds of funds, and that's a significant number, 48. It doesn't really have an industry rank because it's an ETF, so that's really kind of a special case. But here's where I would be looking to move into it. It'd be right about here, which you could do with a buy stop limit order at 138.50 plus 50 cents. So let's take a look at yep. Okay, great. All right. Well, thank you for that. I do like the ARK funds, like a lot of other people, but I don't follow Kathy Woods probably as closely as I should, but she definitely has an excellent reputation. So very, very good on that. Let's see. Hopefully we'll get a next question up here in just a second. A little bit of a issue with bandwidth. There we go. Okay. So, all right, there we go. Unity Software ready to recover to 130. Let's look at Unity. And of course, that's the software that is used primarily in the development of games. And that's kind of interesting. Can we come back to, here's the thing. Here's my take on this. Looking at this chart, it might come back to 30. It definitely looks like it has turned, but here's my point on this one. This is why it's so important to set your stop loss at 7%. When it broke, this stock broke down basically at the beginning of February. The first week of February, this thing fell significantly below the 50-day moving average, and that's significant because as you can see, that's where it broke. That's where it broke, right there. Oops. Let's see if I can get that in there. Yeah, there we go. Okay. So that's where it broke, and it just dropped significantly, as you can see. And then it's been below the 10-day line since then. Now, a good thing has happened. It's broken through the 10-day line, and it looks like it's testing the 21-day. But here's the thing. You can definitely hang on. It may come back, to about the 130 level. But here's the thing. What I would do instead on this one, just because I'm not totally convinced that it's going to come back. It looks like it is. It looks like it's reversed. It looks like it's reversed higher, which is kind of good. So it does look like it's reversed here, but my guess is, here's the thing. I'd be a little bit careful. Now, if I was down more than 7% on this, and I suspect you are, here's what I would do. I would start moving. I would put a stop loss in about 2.5% below where the low of the day is, where the low is. So I would be putting that stop loss in. I'd be moving up, because if this thing reverses lower, you could lose more money. So in order to recover myself, and again, this is why I always recommend, have a stop loss set, because If it pulls back, you're out, and then you could wait for it to come back. But right now, it might come back to 30. It looks like it's made a reversal, so that's a good sign. So I wouldn't sell it now. I wouldn't sell it now if I was holding it. But what I would do is I would carefully put a stop loss below, below each night. So where I would be setting my stop loss basically would be about 105. I would be setting it about 105, and then if it moves up above the 21-day line, then I would move it up. But I would set, right now, if you're in this thing, you want to preserve your capital. So, and you've lost a fair amount. So what I would do here, set a stop loss at 105, see if it continues up. It's up $4 today, which is 3.78%, which is pretty excellent. But I would be careful because I do think this one could fail at the 21-day line. So right now, just put the stop loss in about 105 and then move it up to protect yourself. But it possibly could go back up to 130. It's definitely made a reversal. So that is a very, very good sign on this one. I think maybe the worst is over with this one. So there we go. Thoughts on BLNK? Let's look at PGC first. I definitely like BLNK. Let's look at PGC first to kind of compare them. There's going to be a lot of this is a blank check company. Here's the thing about blank check companies. I just think you need to, in this kind of environment, I know they're all the rage, but I think you should avoid them for right now. The market right now is pulling lower. Okay, overall for the techs, not for the cyclical stocks. The market in general is moving up, but there's a rotation out of techs into some of the more cyclical stocks. So I'd be a little bit more careful with blank check stocks than in the last 6 months. So I would not recommend the blank check stock. Now this is a great chart. It's looking fantastic. And I hope that, it may continue up, but right now I would not be a buyer of this, of PPAC Gladstone Financial. Just wouldn't, because I just want to know what they're buying before I'm interested in them. Now, BLNK is another story. BLNK charging is in a very good area. It is just, it's making a reversal. And I don't know if you can see this on my chart. This is my markup, but it's moved past the 21-day line. So, based on both of them, I would definitely take BLNK charging over the other one. I think you could possibly see BLNK moving, up. If it moves above the 21-day line, that's bullish. That's the line that I want to see, and then hopefully it'll move past the 50. But right now it's above the 21-day exponential, so I like that. Out of these two, I think BLNK is the one. If you do buy BLNK, though, let me caution you, you definitely want to put a stop loss in there. Where I'd recommend putting that stop loss in is at the 10-day line, which is about 34.65. So right now it is trading at 40.56. But I do recommend you possibly putting in a stop loss at 36.65 if you do decide to buy BLNK. But BLNK is the best one of the two. So I thank you for that. Let's take to the next question when I get a cursor. Hopefully, yeah. We're still, there we go. Still having to run the. Okay. Oh, Jim, your BA analysis helped me make. Oh, nice. Excellent. Oh, yes, baby. Okay. Thank you very, very much. You know what? I should have been in hard on the options too, but I did. I basically did just. I did a. I basically did just a. I just bought the underlying. But congratulations, man! Congratulations on that. That's awesome. I love. I love when people make that kind of money. That's so awesome. Yeah. By the way, just for everybody out there, what happened with Boeing was that it formed almost a perfect cut pattern, and it was very obvious, at least it was to me, the chart people, that it was going to move higher, and it was going to move higher strong, and fortunately, it did that. I mean, let's take a quick look at the Boeing chart, and I'll just kind of show you this. If you ever see this. and hopefully I'll get my cursor back. There we go. It's BA, of course, is the symbol, and it's one of the largest. Yeah, it's pulled back, but as you can see, this is typically how a stock moves. The correct place to buy it is basically right at this level, plus 10 cents. Oops, come on, baby. So basically, the correct place to buy it is right about 244 plus about 10 cents. That's the correct place. It's pulled back today, pretty strong, but it still has this very nice upward trend, and this is what you want to see. So, there has been some selling today. Let's look at the weekly chart, but in general, it's moved very nicely above that pivot. So and after hours, it's up a little bit after hours. So there was some selling, there was some profit taking, but I suspect we're going to see it. I suspect with Boeing, we're going to see it probably move up to about the 380 level eventually, because that's looking kind of where I think this possibly is going. So Boeing right now, Boeing, you can't buy it; it's too extended. But I do think let's see if it forms a base. I don't know if it will. I think probably it's going to move a little bit higher, but then it will form a base and then give another opportunity, to buy it. So congratulations on that. Excellent options play. I really love seeing that. All right, let's check RVP. Okay, this is one of my all-time favorites. This is a company called Retractable Technologies. They make a hypodermic. They have a patent on a hypodermic needle that basically what it does is that you can't get stuck with it. And I think it's a very good product. Now, it's kind of been all over the place, so it's been tough to play, but it's still in a channel moving higher. So here's the thing about this one. I kind of draw the channel there. There we go. Here's the channel. Right now, it looks as if it has gotten support at the 21-day line. That's very bullish. So here's the thing on this one. It's not time, Samuel, to buy this one, but it's time to possibly buy it if it moves above. And I want to show you this above this line here. This is the 50-day, and the 50-day line right now is at 1475. So here's the thing, Samuel, for this one on RVP, I think what you want to do here is the way to buy this one is to set a buy stop limit order on this one for let's see if I can get this exact for you. I've got to wait for the lag here a little bit on my yeah, there we go. It's about 1475 plus 10 cents, or 1485. That's kind of where I see retractable, where you could buy it. I think you want to buy it above this line here, the 50-day, and that's going to be about 1485. So here's the thing. Here's the reason you set a buy stop limit. As the stock moves higher, then it basically, as it moves higher on strength, that's when you buy it. You try never to buy a stock as it's moving downward. You want to wait until it's pushed above a key level. The key level on this one is the 50-day moving average for Retractable Technologies, and that is at 1475. So if it goes to 1475 plus 10 cents or 1485, that's where you want to buy it. And this is a special type of order called a buy stop limit order. Now, by the way, I show you how to set one of these on my YouTube channel, and that's pretty easy. You can just go to you can just go to youtube.com/DallasTrading4, and it shows you how to set a buy stop limit order, which is probably the best way to buy it, rather than buying it at the market, because a buy stop limit will only activate if it shows strength, and you want to buy in strength. That's always how you want to do it. All right. Well, I'm going to take the two other ones. I may come back, Samuel. Thanks for that question. Do you think about BLNK charging? I like BLNK a lot. I do think though, and I've been in and out of it. And let's look back at BLNK because I do like it. Here's the thing. I'm interested in going back into it. Let me look at the daily here, the daily chart. Here's the thing. It looks like it's just reversed. Where I really want to be back in BLNK is right about here. You know, right as it crosses, right as it crosses here, and that price is about 45. Okay, so right now it's at 40.56 and it's up, it's off a little bit after hours, but it's the key thing is it's passed through this 21-day exponential. So that's a very key thing. I didn't show you on the screen. There we go. The key thing on BLNK is that we have made we have you know, we have made a test. It doesn't quite get to it didn't quite get to the 200-day line. Boom, we moved up and we pulled past the 21-day exponential. So here's the thing. Here's what I think about this one. I do think it is you know, it's buyable. BLNK is buyable above the 21-day line at and so I basically think that you really want to see it move above about 41.50 is kind of where you want to go. 41.50. So here's what I would recommend on this one. If BLNK charging moves above 41.50, then I think you could possibly buy it based on this chart. But in order to, and I don't say but, I'm always saying but. We want to see a little bit stronger volume here. So right now, you know, we haven't seen the kind of volume we want. So right now, I think it's a watch list. And not a buy, because I want to see more strength. I want to see more volume. Not only do I look at the price action, but what I primarily look at is the volume action. And right now, unfortunately, the volume is declining. So that's not something we want to see. We want to see increasing volume. So based on my gut feeling on BLNK charging, I think we probably have to wait until it gets to about 45. Once it gets to 45, I think then you're going to see some more power. Then you're going to see some more power. So right now, I think it's a watch list. I just really think this is a watch list. It's a watch list for now on BLNK, but it's a very good stock. You should put this on your watch list, because if it moves above about 45, then I think we might be in a situation, especially on high volume, where it's going to be powerful. I do think that one of the things that is happening out there is that we're getting tremendous movement in terms of these electric vehicle charging stations, and eventually somebody's going to come in and buy them. I think some of the oil companies are probably going to come in and buy them, but right now it's a good bet. All right, so let's look at Toyota. TM is the symbol. Let's see if I get my cursor back. All right, there we go. Let's see about TM. Hey, thanks, Tim, for asking a question. I appreciate it. Let's look at Toyota. Toyota used to be, up until Tesla came along, it was the largest, by capitalization, the largest auto company in the world. Now, the thing about Toyota is it's odd, because it's like a lot of other companies that is foreign company. It trades in what they call ADRs, which is American Depository Receipts. So the chart you're going to see here, it's kind of choppy. It's not, you know, you think, wow, this is choppy. Well, that's because they have these ADRs that trade in New York, and then the stock really trades on the Tokyo exchange. Right now, it's, you know, it's kind of, you know, it's doing okay. The relative strength is 30. I just think there's better options out there than this one. There is a buy point, first stage, flat base at 156.30. But here's the thing. Right now, I think that you just can't really, right now, I don't think Toyota is the place to be in the market. Even though it is strong. The top companies are still, are still right now. The top companies are probably GM and Ford. I know that's weird, but let's look at GM. Yeah, GM just has a much better chart, even though it's pulled back today. I want to show you that. GM is just a better chart than Toyota is right now. It's really moving right up the 50-day moving average. So, and with strong volumes. So that's probably a better chart. I'm in Ford. I have several positions in Ford. This one has just, I mean, it's kind of been a slow pokey. I was basically in it at the buy point right here. And the buy point is 12.14 on this one. I've been in since the buy point, but as you can see, it's just making nice progress. Let's go back to the actual daily buy point, because the buy point was 12.14. Yeah, it doesn't show here, but this is where I got in, was right about here, based on this chart. As it exceeded this pocket pivot, that's where I got in. So it's moved up fairly nice. It's pushing up, then pulling back, pushing up, pulling back. That's typically the way a stock runs. It will move up and then it'll pull back and move up and pull back and such and so forth. So looking at Toyota, I would really recommend you take a look possibly at Ford and GM instead, because they're just better positioned right now than Toyota is. Let's take a look at looking at TikTok here. So go see if I can find anybody that needs to ask a question. Okay. Feel about CHPT. We talked about the EV charging, and I still think BLNK is the one you want to be in, but you need to wait a little bit on BLNK until it kind of recovers a little bit. But I do think BLNK is the one you want to be in, not in the other one. Okay, great. Oh, that's less than Toyota. All right, so let's look at GM. All right, with GM, I think that GM is finally starting to look pretty good. It's not going to be a rocket ship like Tesla, but I think that anything above about 57 is going to be pretty good. And right now it's 57.95. So I do think that we're seeing a little bit of a pocket pivot right about there. And what do I mean by the pocket pivot? Well, obviously this is a full pivot. This is called a cup. But what's happening here is that there's a consolidation going on the price from about there to there. Okay. And it has just pulled above that. So it's pulled back. So potentially, I want to see this as it moves above where I'm setting this alert. And the alert I'm setting at is about 56.05. So that's still, okay. So basically we're still, we really kind of are at a place that you could possibly buy this, because after hours it's moving stronger. So it looks as if, at least right now, and there was some volume, and this is the thing you always check to see, as it's moving through the pivot, is to see if that buying volume is moving above that. So I would recommend right now, it looks as if, based on my chart analysis, that we're going to see General Motors probably move up this week. Based on what I'm seeing, it looks as if it's got some good support. I mean, it's not going to be a rocket ship, but I think it's going to move up. So, I think you could buy. I think you could buy GM at this level. I think that you could buy GM is a possible buy at the 58 plus level. Now, of course, none of this, this is just for educational purposes only. That's what I love when they say that. This is for educational purposes only. This is not a recommendation to buy, but based on my chart, it's a possible buy as it moves above this about $58 level. I would consider buying at this level. I'm currently not in GM. I'm in Ford. I'm not in GM. But this GM chart is looking very, very good. And it really could be bought above 55, about 58. Now, if you do buy it above 58, and again, this is just a recommendation. It's up to you. Set that stop loss. Set that stop loss. And where we want to set that stop loss is, and I'll show you exactly, exactly how to set that stop loss. So here's what I would do if I were buying the GM stock, is I would look to set the stop loss. Let me show you how to calculate this, how to calculate the stop loss. Here's what you do. It's not that hard, really. All you do is you go in there, and the price of the stock is $58. Okay. Now, coming through a buy point like this, what you do is you go a little bit tighter. You only give it about a 5%, only bit a 5% stop loss. So you multiply this times 0.95, and that's going to give you a number 55.1. Well, if you buy the stock at $58, you want to be setting that stop loss for about 55.01. So that kind of gives you of an idea of how I would recommend doing it. Recommend doing that stop loss on there. So that's kind of the kind of the deal there. So let's look next question. All right, so let's look at DMTK. DMTK? I don't know what that is. Maybe this is DraftKings. DMTK, is that right? Okay, Dermatech. Okay, Dermatech. I don't know this company at all. I haven't been following Dermatech, but it appears like it's got a very nice relative strength at 98, and it looks like there's been some nice movement on it after hours. Okay, so let's take a look, see kind of what it is. It's got a 77 checklist. That's excellent. The ownership is it's growing. That's very good. The industry is a little bit weak at 90 out of 197. Still pretty good though. Wow. So this doesn't look bad actually. It's basically, it looks like it has reversed off of the it's reversed off the 50-day line. It's above the 20 it's above the 21-day exponential. So looking at this really quickly, and of course this is again not a recommendation, you got to do your own research, but I think this is viable. This is viable right now. So that's how I would basically say this stock is viable based on what I'm seeing here. It looks as if we moved up very nicely, we pulled back, and then we bounced off of the, we were headed towards the 200-day line, but it bounced and it's moving higher. So, and this is good volume. It's touched the average line. So I think that this one is good. I think this is definitely viable. And now, if you do buy this, if you do decide to buy this, this is not a recommendation to buy it, but if you do decide to buy it, please set that stop loss tight. Set it at about, again, just with the little explanation I did, set it about 5% where you buy it, and then as the stock moves up, if it does, then you want to set that stop loss higher. But this is the most important thing: getting the correct entry. This is really, this is a tough thing to do, to get the correct entry on the stock. But if you can, it can be really, really excellent if you get the right entry. All right, market close 1 hour early scam. Okay, well, I don't know about that. Okay, all right. Okay, this is a great question. Why do you prefer a stop loss to a trailing stop? Very good question. Because trailing stop losses reset every night. Okay, so if you have a trailing stop loss, it only eliminates the volatility. It's not an absolute sell. And the reason I do absolutes is because it doesn't matter how the stock is trading. I want to keep as much of my capital as possible. So the trailing stop loss, it does protect you, but it doesn't protect you against capital loss. it protects you against volatility, but not capital loss. So I like to adjust my stop losses, and I like a market stop loss, because if it gets really violent, you'll be sold out. Whereas a trailing stop loss may sell you out, but it may not, because it's for volatility. So sometimes you can only set a trailing stop loss. That's where the stock is extremely volatile. It's a new issue. But on every other issue, I try to go with the regular stop loss. It's just safer and it does protect the capital better. All right. How do you feel about CHPT? Oh no, that's the biggest charging company. I feel fine about CHPT, but BLNK is a better stock. It's just the way it is. I mean, I'm I'm not trying to be not trying to be a jerk here, but yeah, BLNK is a better charge. It's probably now the best of the EV stocks right now. Let's look at Etsy. ETSY. Oh, wow, look at that. Looks like it is. Let's look at the weekly for Etsy here. Yeah, there we go. Well, it's still holding the 50-day line. So that's actually very good. That it's still holding that 50-day line. I definitely like that. It's up today. Has it reversed? That's the question. Let's see if we've got a reversal on that. You know what? I think we have a reversal on this one. Yeah. So this looks like it is a reversal. Yeah, it looks like it's a reversal, and it looks like it's headed higher. If my guess is, it's going to head towards this trend line. So we could be seeing as much as maybe this much movement. Okay. So we could see potentially this move up to about 175 before it reverses again. So I definitely think this possibly is a very good here. It just depends on if it looks like the earnings are pretty excellent. I think this is going to get more strength. It's still, the only thing about it is it's still an area that I think is weak, and that is the at least for right now. But it is an uptrend. This is definitely an uptrend, and it has crossed the 21-day line. That's very significant that it's crossed the 21-day line. It looks like all the other lines are basically correct except for the 10-day. So it does look like it's fading a little bit. Here's the thing. I would probably consider buying this if I wasn't already in it. I would consider buying this at about the 230 level, and the reason is I want to see it power a little bit higher. But it looks like it is in a it is in an uptrend. So basically, it looks like Etsy. Would buy above 230. So that's kind of my so right now Etsy, which I spelled wrong. let's see if I can change that. ETSY. There we go. So Etsy is in an uptrend here. It is in an uptrend. It looks like it's cleared the 21-day exponential. It's looking to me like it could move possibly above 250 and possibly even to 270 in this particular run. I don't know if it will go that high, but right now I think it is. You could buy it probably above 230. It does. It definitely is an uptrend. So. But remember, if you do buy it at this level, be careful because it can reverse on you. But this chart is looking good. Its earnings per share were phenomenal, up 332%. So the earnings have been just off the chart, and it does look like it's it did test the it tested the it almost tested the 50, but this is very, very strong. This is total leader. So above 230, I think it's decent. I think this one is decent as well. Okay. Can you look at DDD? Okay, this is Dow DuPont. This is one of the oldest companies in the world, actually. I mean, it's been around. I mean, DuPont. I think it's been around since like 1802 or something like that. Back in the time of Jefferson. Unbelievable. This stock is actually looking pretty good. I'm surprised. I'm not normally a buyer of. Oh, that's Triple D Systems. Excuse me. I thought that was Dow DuPont. Printing manufacturer. Okay, this is looking good. It's pulled above the 21-day line. That's not bad. That's not bad. It's relative strength of 98. It's got a decent checklist. The ownership is excellent. Yeah, it's increasing too. That's good. And it's a good rank. I have to say this is buyable. It's the only problem on this one I can see is lower volume. But other than that, I think it's quite good. So basically my only thing on this one is lower volume. But other than that, viable. Good. So that's kind of how I look at it on this one. This is quite good. It does have lower volume. This is one of the things that I am a little bit, obviously, no chart is a perfect chart. Believe me, I'm always finding places to look, but this is one thing I like. This is lower volume. I'm not as excited here. It made its big run back here in January. As you can see, there was just all this volume. Something was going on here that just really moved. It looks like it's recovered down and up. So, it's still very, very good. I'm a little bit, I don't know the company well, but it's definitely buyable. It's a little bit lower volume than I'd like. I like to see increasing volume. But other than that, it's looking pretty good. Looking pretty good. All right, let's look at Shop. Thank you. How about Shopify? Okay, let's look at Shop. SHOP. And wow, okay. Let's look at this. Is interesting. It's an interesting. I've been watching Shop in the last few weeks, but that's basically what happened here. Is it made a test of the 200-day, and hopefully I'll get my cursor back. There we go. Yeah. So let's go to the weekly. Yeah, it made a test of the 200-day moving average. That's this black line here, as you can see. And it made a test. So so the last time it tested was back here last year, about at the bottom of the COVID recession here. So this was the sell-off. This was the COVID bear market, and then the stimulus came in, and then boom, we've been up. So it's the first test of that. Here's the thing: it's still a little bit. I think you could buy it at this point because it's above the 21-day line, but it's still a little bit. No, it isn't. Here's the thing: I probably wouldn't be. I'd be a little bit careful about entering this one because it's so expensive. I want to see it move above that 21-day line, and currently, I'm going to set an alert right about there. Basically that is the 21-day line that I want to see it move above. If it moves above that, then I'm more interested. There was the last buy point on it was a consolidation base, but it was an 8th stage of consolidation. By the way, the first, the second, and third typically work the best. By the time they get to the 8th, it's not so much. So that's the reason why it kind of probably ran out of gas. You know what? I would be a little bit careful on this one. I just don't think, I think that it's a watch list. Needs to strengthen. So here's what I would say about Shop. I mean, if you're in it and you have good profit in it, fantastic. I mean, just keep holding it because it's looking good. But it's not a good time to enter it. I don't think it needs to get stronger. You need to watch this. It really needs to come above the 50-day moving average, and that's currently that 50-day line is right about 1232. So that's where you want to be entering Shop. Right now it's at 1163. So it's significantly below that 200-day line. Well, I have wasted another hour of your time. Thank you so very much. If you want to get on the action trade alerts, it's really easy to do. And basically what you can do is just go to this address, and the free trade alerts are basically just go https:// sendfox.com/Dallas Trading Floor. So remember this, sendfox.com/Dallas Trading Floor. It'll take you right to a sign up for the action trade alerts. And by the way, if you are looking on TikTok, it's super easy. You can also get to the action trade alerts very easily. Just go to my bio, press the link, and you'll see there'll be a little sub menu that pops up that allows you to sign up for the action trade alerts. So without further ado, thank you everyone for taking a look today. I'll be back at 2:30 tomorrow, Tuesday, with some more stuff. And till then, happy trading.